and welcome everyone to the second quarterly webinar from the ASA's International Executive Protection Community. In this case, well, I'm honored to present Joseph LaSorsa, Joe, as many of us call him, um, who will be presenting a very interesting subject, Decoding IRS 132, Guidelines for Employer-Provided Security. Well, I cannot really speak highly enough of Joseph. Well, he has a wealth of knowledge, of experience, both at the public service, as he was a member of the protective forces in the U.S. as well as in the private area, where he has had a number of years of experience protecting ultra high network individuals, corporations, as well as a number of very important individuals, pretty much in not only the U.S. but worldwide. Joseph is basically one of the persons that I know that is more willing to give and to share, yeah, which is great. And again, with this a decision of sharing his knowledge, well, we requested that he comes today and basically shares us a little bit about one area where he has had a lot of experience lately, which is the filing of all documentation related to IRS 132. He's been very kind on accepting this invitation. Um, I believe we are really with one of the persons that will be able to guide us the best in this endeavor. Plus, of course, with his experience as an instructor, well, Joseph will be able to handle this event very, very well. A great person and a subject matter expert. So I really cannot really say much more about him. And I prefer to leave you now on the floor. Joseph, it's all yours. Do you want to share your screen, please? There we go.
All right.
Perfect. We can see you and we can hear you very well. So the
Good.
floor is all yours. Thank you.
All right. Well, thank you so much, Kevin. Appreciate the intro. Just to clarify, my father was the public servant. He was Secret Service 76 to 96. I was a Marine and I got started working under my father. We do a lot of security consulting. We do a lot of training. And that leads us to this IRS 132, which that is something that has been, let's say, you know, a point of confusion for a lot of people, and then especially with everything that's going on with the events of December and into this first quarter, and it just continues on with targeting executives in various capacities. It's a very important thing as companies move into spending more money on executive security. So here we are. So I want to get right into it. A lot of information here, a lot of things to discuss. And I'm just going to bring up my chat as well so I can hopefully catch any questions that you guys might have. Feel free to throw them into the chat. All right, so let's see how this works. There we go. So what we're going to cover today is I called it Decoding IRS 132 because it is a code of federal regulations. It's a part of the Code of Federal Regulations of the IRS. So I said, let's decode that and just make some sense of it. So that way we can all be on the same page and be clear of it. So what we're going to cover is what is IRS 132? What is it? And clear the air on that because there's a lot of misconceptions and a lot of things get regurgitated that people share because it's an IRS regulation that's in a not the clearest format, let's say that. So given our experience consulting on this, dealing with outside counsel, dealing with audits, we've got a very clear picture of what it is, and that's what I wanted to share with you guys today. So we're also going to talk about why does it matter? Why does IRS 132 matter so much? And especially when we're talking about building EP programs. Why does that matter so much? So we'll break that down. I'll show you some examples and we'll talk through it. And then lastly, what can we do about it? So it's something that the IRS imposes. It matters because it's going to be very expensive if we don't handle it appropriately. So what can we do about it? And that's what is kind of the big part of it, is giving some answers of what we can do about it. So three main topics here. Again, guys, feel free to throw in questions in the chat, and if you need to, unmute yourselves as well. But there's a lot to it, so let's get right into it. Firstly, let's look at the SEC's disclosures of what a perquisite is for a executive security. Okay. Sorry, the clicker just wasn't working for a second. So the SEC, starting with not the IRS, but the SEC, they consider personal security arrangements, some things that we apply to executives, as perquisites if they are not integrally and directly related to a Section 16 named executive officer's job performance. So basically, if they don't have to have that as part of their job performance, then it's something that is a perk, something a nice to have, not a need to have. Okay. Even if these are for business purpose or for the company's convenience and they add a benefit to the company, they can still be considered a perk and they have to be disclosed. So on SEC disclosures, you'll see this on some documents that I'll show you. They will have, let's say, you know, very clear stipulations for what has to be disclosed and what has to be um, uh, also disclosed on the 10Ks and everything else. Sorry, guys, I just got somebody hopping in and out of here. So we're just trying to keep the room clean here. Even if these measures serve as a business purpose or are for the company's convenience, they are deemed personal benefits and must be disclosed if they hit certain benefits. So now those certain benefits, or rather the certain thresholds to those benefits, are 10,000 in a fiscal year, which is very easy to do. And over 25,000 or 10% of the total perks that must be itemized. So based on this, this says that these disclosures have to be included and put into a certain format that has to have the nature of the security arrangement, the aggregate incremental cost to the company, and the methodology used to calculate the costs. All of that has to be into the disclosure. Okay. So that's from the SEC. The SEC is the starting point for this, that says that, these benefits that are provided from an employer to an employee have to be disclosed. Okay. So then the IRS looks at that and says, okay, well, if they're disclosed, they are, reported income to that individual, right? So now we have this thing called the Section 26 of the Code of Federal Regulations for the IRS, Chapter 1, Section 132, Paragraph 5. All right, it says it's called the working condition fringes. This IRS code governs the tax treatment of these fringe benefits. Okay. So what is a fringe benefit? It's not cash, it's not payments, it's other things that are provided, and they directly relate to the employee's job, and they would be deductible if the employee had paid for it under Section 162 and 167 of the IRS CFR. So basically, if it's a deductible expense that if the person had paid for it directly and they get it, it is considered a fringe benefit. Okay, a fringe benefit. So a benefit that the employer is providing to the employee. So in sum, what is IRS 132? It is the IRS's way of collecting taxes on perks provided to executives without a valid security concern. So again, guys, it's the IRS is it makes sense with this. It's saying that if a company is giving perks to an employee, they're providing them, private air travel and all these extra things that other employees don't get. Well, that's taxable income. Okay. So just a funny picture here. Of course, the government wants their money. But honestly, if you read it out correctly, if you read it the way that it's written, it makes sense. It says again, if there's no reason for it, you can't just fly your executives on private jets and give them all these extra perks unless there's a valid security concern for it. And that's where Section 132 comes in play. In this section, there's a paragraph that details what if there's a valid security concern. So again, the IRS makes a little bit of sense with this, and they break it down a little bit further, which I'll get into. But firstly, some misconceptions on 132. Everyone, throws this word around, IRS 132. What is it? What does it do? And a lot of people will say things like, "Oh, it can make your entire EP program a tax write-off." Well, no, it is not going to make your EP program a tax write-off. What it does, what IRS 132 stipulates, is what is considered a fringe benefit, and then how we can negate the tax liabilities on those fringe benefits. So that's it. It's just simply not paying taxes on certain, things that are provided from an employer to an employee. Okay. So it simply negates the and it's personal tax liabilities. Personal tax liabilities. If an employer provides something to an employee that's considered a perk, not for a valid security concern, it actually hits that individual as a personal tax liability. They have to pay taxes on it, just like income tax on their income. So that's what it does. Okay, it gives those individuals some reprieve from those tax liabilities on those services. Again, it doesn't turn your EP program into a positive, into a tax write-off, it doesn't do any of that. Okay. Another one that I hear very often, especially when I say that I do these, people say, "Well, don't they have to be done by? Doesn't an independent security study, which is what the IRS calls their security assessment for this, doesn't an independent security study need to be done by a consultant who is not an EP provider? Isn't that what independent means?" No, no. Independent means that you are not an employee of the company. Naturally, if the company is trying to prove that they have a valid security concern and these individuals shouldn't be paying for extra taxes on these services that they're getting, that shouldn't be done by an internal employee of the company. That just doesn't make sense, right? There's a bias there, if you will, and a potential conflict of interest. So what they do is they say it needs to be done by somebody who's independent, an independent security consultant. And that means somebody that doesn't work for the company. Now you can take that a little further and you can let's say read into the nature or the spirit of that, ruling, and it should essentially be somebody who doesn't provide those services for that company as well. Just to keep it safer. Now, by the book, by the writing, by the auditor's guide, it doesn't say that that has to be the case. But I would argue with you, you probably shouldn't be providing the services that you're justifying, if you're in this capacity. So I would say that you're working for a company that you don't currently work for at all, just to play it safe, if that makes sense. So Omar's point right there, doesn't independent also mean a consultant who is not providing or representing services? Not necessarily. It doesn't mean that you're not representing services. It means that you're not providing those services for that entity, perhaps. But by the letter of the law, by the regulation, it says not an employee of the company, an independent provider. So as long as your contract is an independent contractor, they use that same word for a reason. There you go. Okay. John, I'll get to your question in just a minute. Okay, so John asked a question about the security concern. We'll get to that in just a few. An assessment needs to be done every year. No, it's not a timeline stipulation. Okay, so it's not a timeline stipulation. However, the only guidance that the IRS gives on how often something needs to be done here for an ISS is it says it needs to be periodically assessed. All right. And then the obvious point to make is it needs to be redone after major changes, such as if the CEO, changes, obviously, if it's a different person in that position, or say there's a large acquisition or merger or something like that. So what does periodically mean? Well, periodically means how often should an assessment be done, regardless if it's for tax reasons or not. And we typically say 2 to 5 years. And that's anybody on here. I mean, we can argue the point back and forth, but I think you can say any security assessment should be done based on circumstances within every 2 to 5 years. I think Kevin put out a benchmarking study or survey rather on this recently, and I believe that was about the findings. It was about 2 to 5 years. So again, it's based on circumstances though. So if nothing changes, the company doesn't grow significantly, sell off anything significant, the CEO stays the same, yeah, maybe you can stretch it to 4 or 5 years. But typically every other year is a good, rule of thumb. And of course, again, under major changes. Okay, it should be redone. All right, so let's move on to why does it matter? Why does IRS 132 matter? Because what IRS 132 says is if services are provided from an employer to an employee, that employee needs to pay taxes on the amount of those services as if it was income. You can imagine the after United Healthcare murder, they went from a reported around 900,000 or so to doubling that to 1.7 million. All right, very quickly. All right, just in a matter of months from their recent disclosures. So you can imagine even something like that goes up to 1.7 million. So let's say an individual is receiving 1.7 million in reportable, disclosable benefits. So now they have to pay taxes on that 1.7 million as if that was income to them. Now, as all of you can understand, if you're providing executive protection to a CEO who's never had it, especially, and all of a sudden you say, hey, Mr. CEO, here's executive protection now. Oh, by the way, you're going to pay out of pocket on that. It's not going to go well. I think you can all agree with me that that's not going to work. And what happens a lot that we see a lot is people don't understand IRS 132. They might not even know what it is. They might be completely ignorant of it. So then they apply an EP program. And then at the end of the year, when they file their taxes, now all of a sudden they're like, oops, they didn't do an ISS. They didn't set it up right. And now that individual has to pay taxes on those services. So of course they end up shutting down that EP program. So that's why it matters. Look at all these things that have happened here, especially the United Healthcare murder was the big catalyst. But there's a lot of things other than that that have occurred, especially since then. But this is something that was the big motivating factor of all of this was the United Healthcare murder. There's a lot of spin-offs from that, as we saw in New York here with the other financial CEOs being targeted. Recently, just a couple of days ago, June 16th, there was an article there, the deep dive article down there, the bottom middle, was put out about how the S&P 500 chiefs boost bodyguards and security to offset rising risks, and they noted that the increase of NEO, named executive officer, which is NEO security has increased to 34% from their recent findings and disclosures of studying disclosures. 34%. So it rose up to that. I'll have some more stats for you here in a minute on that. So everybody's spending more money on executive security. So again, why does it matter? Because now they're spending more money on executive security, which means those individuals are going to have to spend more money on the taxes that are imposed because of those services. I hope that all makes sense, guys. Feel free to ask for any, clarifying questions if you need to. So here, this slide shows a lot of good stats for you on the executive security spending over the past few years. We've been tracking this. We've been doing a ton of these since about 2018 or so is really when I started doing these. We were involved in them in some capacities, but from 2018 or so to now, we've done a lot of these and a whole lot this year. But what it comes down to is the increase in spending. So here, this was just the article again a couple of days ago. Mention of CEO security and corporate filings rises to 34%. If you look at some of these stats, 31.3% in 2024, companies provided security perks to at least one named executive officer, and 13% are other than the CEO. Okay. And look at the numbers of the past few years. It was 21% in 21, 23% in 22, 24.5% in 23, 31 and a third in 2024. So you can see the general increase in executive spending. Okay. And then the median spending on security perks, it kind of fluctuates as well, but if you can see that very large increase from about 40,000-ish in the 21-22 timeframe to 94,000 in 24. So more than doubled in a couple of years. Okay. The resources are in there from where I got this information from. This is not, no secret sauce here. This is all open source information. Okay. But please, guys, if you ask me where I got it and you want me to explain it further, I'm happy to. Not necessarily here, but email me or whatever you need. Take a look at these. These are some big name companies. So Intel increases spending from $3,000 in 2023 to quarter million in 24. All right, they cited in their disclosures the heightened security concerns due to the high visibility of its executives. So things happen, such as one of the prominent things that we see that's been the hot ticket item over the past couple of years is employee compensation being reported and publicly disclosed, which it is, but it's not in the mainstream media. And over the past couple of years, we've seen this trend, if you will, of what CEOs make being put out there. A month or two ago, I saw this thing posted, the top 20 paid CEOs in the country. I don't know if you guys saw that. So it shows the top 20 CEOs by name, company, and even their picture, and then it shows how much their, reported income is. And it's, anywhere. The top one was I think 120 million or something like that. Okay. So of course people see that, and that can, obviously just raise attention, but obviously raise concern and risk and everything else. Okay, so you can see here, I'm not going to read through everything on the slides, guys, unless you have questions, you can read it. But here you can see things, Lockheed Martin, significantly increased about 10 times, all right, 8 times rather, 798%. All right. And then other brands like Eli Lilly, it's their first disclosure ever. That's a very common trend as well. So 2024 saw more first-time disclosures than any previous year. So let that sink in for a second. So 2024 saw more first-time disclosures than any previous year. So more people are providing EP in some way to their executives than ever before, is the way that you see that. Bruce's question, is there a threshold to the perks that are being provided? Um, Not necessarily. So there's that low threshold of $10,000, or if it exceeds 10% of all disclosures. However, if basically the rule of thumb here is, since $10,000 is nothing, it really is. And when you're talking about executive security and private air travel and residential security, basically, if the company is providing, the way you look at this, Bruce, and everybody else, the way you look at this is if the company is providing those services to an employee, you need to consider doing an ISS and how to fix the problem. Okay. Because the IRS is going to look at that. And guys, I want to bring up another point on the fact that I just brought up. So 2024 had the most first-time disclosures of any other year. So what is that going to tell you for the IRS? What are they going to be hot on? You know, the IRS is going to be looking at this and is going to think, okay, everyone's jumping on the bandwagon here and trying to get this, covered. And all they're doing is the way the IRS is looking at it is all they're doing is flying their executives private for convenience, for, speed and mobility and efficiencies. And they're going to audit like crazy, I bet. I mean, I'm just kind of waiting for it. This is going to be a crazy year, 2025-ish. I'm sorry, 2026 year is going to be auditing the 2025 and 2024 um, um, taxes like crazy. So it's going to be, I would say, a significant workload dealing with that. Why does it matter? Further is non-compliance. So if we're not complying with IRS 132, there are significant costs involved in this. Okay. So at a high level, we have an example here in 2023. Uh, this was Meta. They actually reimbursed one of their employees $785,000 to cover the taxes associated on the services that they received. So basically, what happened here was Meta essentially didn't cover their bases correctly. It seems like they didn't do perhaps the right, they didn't establish the overall security program or do an ISS perhaps on this individual. And based on the services they received, they were hit with $785,000 in taxes on the enhanced services that they received. So Meta reimbursed them for that, said, hey, sorry, we gave you these services. Now you're having to pay for them, but here we'll just give you the money to pay for those taxes. But that's pretty silly if you think about it. I mean, not saying that they did it, I'm not saying what they did is silly. What I'm saying is silly to think that that was on purpose. Why would they want to pay and reimburse their executives tax money when they can, get it alleviated, front load that, right? So it just makes more sense. All right, sorry, I'm trying to catch up on the questions here. All right, Mark says, does 132 apply to private company as well as only private? That's a very good question, Mark. So the only way that it applies is based on the relationship of who's receiving the services. So if it's a private company and it's an employer-employee relationship. So if it's a private company and they have a let me give you an example here. Okay. So one of my clients that I'm working with right now with this, it's their company. It's not a publicly traded company. They don't deal with SEC disclosures. They don't deal with any of that. It's not a publicly traded company, but they are the owner and sole proprietor of this company. But they are considered an employee of the company and compensated as an employee of the company. Okay. So that is what makes this apply. So basically, because they are an employee of their own company, they're receiving services in an employer to employee relationship. Okay. So that's what matters, Mark. Good question. Very good question. All right. Mike's question. Yeah, that's the big one, Mike. That's what we're going to get into next is does IRS scrutinize the assessment to determine if security is essential? Yes, they do. Yes, big time. That's what the audits do, and we're going to cover that here in just a minute. Okay. All right. So what can we do about it? So what can we do about it? What can we do about IRS 132? We don't want to just have our executives, have to deal with tax liabilities on these services that we're giving them. And we certainly don't want to have to reimburse them for those tax dollars that they're having to spend. That just doesn't make sense. So what can we do about it? In the Code of Federal Regulations, Section 1.132 Tech 5, work condition fringe explains how they get these benefits if they get these benefits because of their position, because certain conditions exist. If they're getting them because those certain conditions exist, there's a way around it. It's specifically Section M. So it's 1.132 TAC 5, Section M. It clarifies what, and this is to your question, Mike, what a business-oriented security concern is. Okay, a business-oriented security concern. All right. That's what they talk about here is what is a business-oriented security concern. Now, let's break that down for a second. All right. A business-oriented security concern. So let's say I'm going to use Mark Zuckerberg of Meta as an example. So with Mark Zuckerberg, uh, if we remove his position with Meta, let's say like Meta doesn't exist. Okay, so Meta doesn't exist. Would he need those services? And if that answer is no, then a business-oriented security concern exists. Okay, it's business-oriented. It has to deal with the business that they're part of. Business-oriented security concern. So now, if we look at that and we say that there is somebody like an Elon Musk. If you guys understand, Elon Musk and what he does with all of his businesses, let's say we remove him from all of his businesses and he's still involved in Doge and everything else. He's a social media activist, things like that. He would still have a security concern that isn't directly business oriented. Okay. So this wouldn't apply to somebody like Elon Musk. Okay. So this is where this comes into play here, Mike, is it has to be a business-oriented security concern. If somebody, this is one thing that we look at when we do these assessments is we look at, are they at risk because of who they are, because of their status with that company, or are they at risk because of what they post on social media personally? Does that make sense? That's just an example. All right. So that's what the IRS looks at primarily. Mike, to answer your question, is they look at when they do an audit, and we've been through several of them. So when they do an audit, they look at, is it a business-oriented security concern? Okay. All right, so I hope that answers your question. And then Brian, you say same application or special designation for a 501(c)(3). So I'm actually dealing with a 501(c)(3) right now as well at a DC. And yes, it's the same thing. So 501(c)(3)s can have employees. That doesn't, change the relationship, Brian. So if a 501(c)(3), just because they're a not profit, that means that someone doesn't own it and put that money in their pocket at the end of the year. But the company is set up just like every other company. So if they're a nonprofit, they can still be subject to this. Now there is a different section that deals with government employees and nonprofits, but to answer your question directly, it still applies. The biggest thing, guys, is to understand, is it an employer providing these services to an employee? And if that relationship exists, this section applies. Okay. Now, here are the two pathways to comply with IRS 132. So section 1.132 5, section M, and then the subsections 2 and the subsection 2 again provides that an overall security program must be established. An overall security program. So an overall security program is one that provides security on a 24-hour basis. So basically what the IRS says is if you provide security on a 24-hour basis, then that person is essentially qualifies for IRS 132 exemptions. Okay. You validate it by providing security on a 24-hour basis as an overall security program. I'll show you an example of a 10K disclosure, in which case they say, hey, this person has an overall security program, and they therefore comply. Now, I would still say you should do an ISS. You don't technically have to. If you provide security on a 24-hour basis, that means that EP is applied on a 24-hour basis. You don't necessarily have to do an ISS as per the regulation. I still recommend you do. It's like kind of like, an added level of protection. But as it's written, if you provide an overall security program and you're left to an IRS auditor agreeing if you actually qualify with an overall security program, that's why I say you should still do an ISS. You comply. The other one is the majority of S&P 500 companies, they do not provide 24-hour protection to their executives. I think most of us in this room, I think you understand that, if we look at the coverage that we provide to our executives, overwhelmingly, it is not 24/7 protection. We don't have EP at the house, at the residence, 24/7, at the hotel, everywhere they go, they're covered 24/7, 365. That is pretty rare, honestly, just the way that the numbers show. All right, so it's less than 10%. All right. Then depending on how you look at it, can be even less than 5%. It just depends. Okay. So how do we comply with IRS 132 if we don't provide 24/7 security to our executives? Well, it says under that other section, it says an overall security program is still deemed to exist if a security study is performed by an independent security consultant. That security study has to be an objective assessment of all facts and circumstances. All right. It has to recommend that 24-hour security is not recommended, or not necessary, rather, and that the employer provides those security recommendations on a consistent basis. So all of those things have to apply. Okay. So there's a lot of things in there that deal with, yeah, sorry guys, I've used the acronym now. I said an independent security study previously. Um, all of these things have to apply in order to maintain compliance. The IRS isn't going to make it easy on you. All right. So all of these things have to apply. You have to periodically have an independent security study performed that has to look at everything. It has to look at all facts and circumstances. Okay. You have to recommend that 24-hour security is not necessary, and then all other recommendations have to be provided on a consistent basis. And that's the hard part to comply with. So what does that mean? All recommendations that are listed in the security study need to be provided on a consistent basis. Okay, that's the actual wording that they use. So what that means is if you provide, for instance, a security driver to your executive, it is not considered per the IRS on a consistent basis if that person decides when or when they don't get that driver. So basically, if your CEO is like, oh, I want the driver today, oh, I don't want the driver tomorrow, that is not providing that on a consistent basis. You do not comply with IRS 132. It has to be programmatically applied based on assessment. Okay. I hope that makes sense. That's kind of a big point that we go through with a lot of clients is how to comply with that. And in short, what you have to do is make sure that it is not being applied on a whim. It is being applied on a programmatic, systematic basis consistently. Okay. All right, so lots of stuff on this slide to unpack. I mean, I could spend days on this, but I want to show you an example that kind of exemplifies it for you. So here is a Form 10K, which is the disclosures for the Security and Exchange Commission, the SEC. This is from Meta Platforms. Okay, so this is what Meta says. Hey, look, this is our transparency document. This is what we do as a company. This is a lot of things about the company and basically where their money goes and where it comes from and everything else. Part of this, all right, part of this 10K form deals with executive compensation. In that executive compensation, here's the section. Under executive compensation, there's a section for perquisites and other benefits. Okay? Perquisites and other benefits. So if here under the highlighted section, you can see that they use these terms very specifically. This is all, legal speak, right? So under Mr. Zuckerberg's overall security program, why do they call it that? Why do they call it an overall security program? Because whoever wrote this was smart enough to use the IRS terms in there so that way it legitimizes it. It is an overall security program which qualifies for IRS 132. We pay for costs related to personal security, Mr. Zuckerberg at his residence during travel, yada, yada, yada. Pre-tax allowance of 14 million. Okay, so that's a lot of money. All right, this is a big one that I found. That's why I used it. Mostly they're not that impressive. It's a couple 100,000, a little over 1 million. That's pretty typical. 900,000 is the average. Okay. 900 and just under $1 million is the average for 2024 so far for things that were reported. So here it even says right above the highlighted section, it even says Mr. Zuckerberg is one of the most recognized executives in the world, in large part of his result of the size of the okay. So what it's putting in there is the determination that his risk is business oriented. So in this document right here, it's actually justifying and lending to an ISS, and that's why it's so important that we review these because it's actually saying what we need to know. It is a business-oriented security concern, and he has an overall security program to the tune of $14 million. Okay. Omar's question, if the assessment makes a recommendation, but the organization wants to modify the recommendation, do they then not comply? Well, yeah, they don't comply if they modify your recommendation. Now, it depends on the level of modification. That's a great question. It depends on the level of modification. Now, that's part of hiring a good consultant to do this is a good consultant won't over recommend. They won't recommend things that you're not going to be able to comply with. And the consultant should be working with you on that. Okay. But yeah, in short, if they modify the recommendation, it typically does not comply. They have to comply with the recommendations in spirit and in consistency. Okay. All right, so I just want to show you this example of the 10K. Here is just further explanation of that independent security study. Independent security study. So what this is there has to be, if not an overall security program, nice shorts, Mike, by the way. If there is a if there's a overall security program, then that complies. If not, we need to do the independent security study by an independent security study. Mike, I like the shorts. Nice. Good stuff, buddy. Uh, so this exemplifies a business-oriented security concern. It has to provide reasonable recommendations on when and where that protection is warranted. It has to explain for how long that protection is warranted. And again, guys, those recommendations must be applied consistently and potentially to their family, their spouse and dependents as well. Okay. So all of these things need to comply, need to be imposed in a independent security study. There's a lot to do with independent security studies to make sure that they are, let's say, not only useful to the company in that they provide useful recommendations, but to Mike's question earlier. Mike's question earlier was, are security assessments scrutinized by the IRS? Yes, 100%. So when a company, say like Meta, says, Mark Zuckerberg did not have an overall security program and he had to get an ISS done, which is an independent security study that says 24-hour security is not necessary, but we recommend these things. You know, private air travel for business and this and that and this and that. And we make these recommendations. The IRS is going to audit the program and they're going to look at primarily your independent security study and they're going to read through that and look at it and they're going to look for certain things to tear apart. What they're trying to do is they're trying to, these four items right here, they're trying to tear these apart to make you, show that you're not compliant, right? So they're going to show that there is not a business-oriented security concern. They're going to show that you did not provide reasonable recommendations and you did not warrant when and where protection is warranted, that you did not warrant how long protection is warranted, and that you didn't do this on a consistent basis. The company didn't do it on a consistent basis. Now, again, the company providing the recommendations on a consistent basis, that's on them. But at the start of it, it's on the consultant because again, the consultant has to balance the recommendations with what's feasible, with what works for the company within their budget. I can't write an ISS and look at a company like Eli Lilly that reported 74,000 in benefits and be like, you should be flying your executive private everywhere he goes for business and personal travel. He should have a bodyguard and a security driver everywhere he goes for business and personal travel. He should have a 24/7 RST. And like, I can't do that. That's not feasible. That would make me incompetent essentially at my job. So it really comes down to the consultant needs to write the report that justifies the business-oriented security concern, provides reasonable recommendations for when, where, and how long protection is warranted, and it has to have a plan for the company to consistently apply those recommendations. All right, those big four things. That's the four things, the four primary things that go into an ISS. And again, that is what is going to be audited. Okay. Adrian's question, what's the ballpark pricing for an assessment like this? Well, I mean, this is a human service. So, it's going to come down to anything else. You're going to have people that claim they do this for, $1,500. The most expensive one we've done to date was 75,000. So it just depends on how much complexity is involved with the executive. Some executives, if they have multiple homes, they travel the world, they deal with multiple businesses. I mean, that's the case in which I just explained for that high value ISS that we did was because that individual had a lot of businesses that we had to write these for, and they had multiple homes all over the world. So it depends on the complexity of the individual. You can't one stamp price this, if that makes sense, Adrian. You have to look at the overall complexity of the individual and the company, and make an assessment on how long it's going to take you to look at all facts and circumstances. Understand, guys, the IRS has it listed in there that the independent security study must review all facts and circumstances. That's the words they choose to put in there. What does that mean to you? Okay, what is it? And more importantly, what does it mean to the IRS auditor who comes to look at your report? They're going to determine if you looked at all facts and circumstances. So, you have to have a really good justification for what you do in these assessments to be able to survive an audit potentially. Again, the costing is just too complicated. I would say the typical cost, I will give you an answer as best I can, Adrian. The typical cost, I would say, is anywhere between 15 and 30,000 for an ISS. And again, that depends on the complexity of the individual, okay, and their business. All right, I'm going to try to answer some of these questions as I can. Residential site assessment for the executive. This is required. Todd's question, a residential site assessment for the executive. So the IRS looks at when and where security, that's a great question, Todd. Is a residential site assessment required under this? Again, is that considered all facts and circumstances? I would say yes. I would say absolutely. A residential site assessment is mandatory in a ISS because part of what the IRS stipulates is how does that employer protect their employee at home, in transit to work, at work, and under business travel, all right, and potentially under personal travel as well. So those things are what's listed in the IRS CFR. So absolutely, I would answer that question with in my opinion, which I'm limited to my experience, guys. I don't know everything about this by any means. I just know enough based on my experiences to say, in my opinion, yes, a residential site assessment should be included in an ISS. Do we interview the protected individual and their family? Often, not always. So that's a great question, Adrian. The executives themselves, they might be completely disinterested. And if they don't have anything to offer us, we don't want to grab their time and waste it. So what we do is we typically will ask the executive, that the protected individual and their family, if they have any concerns that they would like to discuss with us, we're open to do that, but we don't force that. We can typically, and unless I can think of very few examples where we felt like we had to, and it's because we weren't getting the information that we actually needed to justify the business-oriented security concern without a personal security concern being applicable as well. But in most cases, Adrian, what we do is we leave it up to that individual if they want to talk to us or not. Most executives have a very elaborate ecosystem, and we can get all the information that we need to perform the assessment, considering all facts and circumstances by our research and dealing with all of those people. I have an ISS going on right now where I have 22 interviews. So I'm talking to 22 people and I'm not talking to the executive yet. I probably will in this case. He's on board with it. He's interested in it, and he will want to talk to me, I'm sure. But I'm going to talk to 22 individuals before I talk to the executive, the actual CEO. So I'm going to get everything I need to know out of those 22 individuals. I can pretty much guarantee it. And at the end of it, I won't need to talk to the CEO, but if he wants to talk to me, then of course, I'm working for him. All right, guys. If the company does not currently have a security program but is looking to create one, would the 132 also be a TRV assessment, or would that be a separate study? That's a great question. That's a great question, Mike. We typically separate them so that way there is a very specific document, a very specific effort just for this. So we can uh, let me explain how we just did it to one of the companies that had that exact the inquiry first was, hey, we want to do they called it an RTVA, as most of them do. So they said, hey, we want to do an RTVA. And I said, okay, sure. And as we talked about it, I actually understood that what they were wanting was an ISS. But an ISS has a very limited scope. So what we did was we said, okay, sure, we'll do a full, what you call here TRV, threat risk vulnerability assessment, or whatever you want to call it, RTVA. We'll do that for you, and then we'll also do an ISS. So now they get two separate, you know, finished work pieces, right? They get two different documents. So one is an RTVA, which is kind of, holistic, and then one is under the scope of this, under the scope of the independent security study. What is that employer spending money on to their employee? Let's justify that with a business-oriented security concern, provide reasonable recommendations, when, where, how long, and let's make a consistent plan for it. And that way we separate it out. So that way they have a functional document And that's a lot more money, obviously, because that's a lot more work. That's two separate assessment projects essentially, but they paid for it and they were very happy with it. But they get this functional document that kind of covers everything holistically, and then they have this, break glass in case document in case they're audited. If that makes sense, Mike, I hope it does. But that's a really good question. I've actually just dealt with that, like I said, recently, so very timely. That industry price range varies greatly, guys. Again, that I know everyone's curious on how much it costs. I would say that the kind of standard range is like 15 to 30, but again, it depends on the complexity of the individual and the company and everything else. All right, so you can't really put a price tag on it. And again, guys, it's a human service. So just like hiring an attorney, they're going to charge for their experience. They're going to charge for how good they are, their connection, everything that they charge for. Same thing applies here. You're hiring a consultant. I would say go with the most expensive that you can afford that gives you the right feeling about, satisfying the problem for you. Don't go cheap. People know what they're worth. I would say this, one thing that I've learned is in private enterprise, everybody charges as much as they think they can. Nobody charges less than they think they can. So, that just kind of tells you something there. I'm the most expensive training provider for a reason. Why? Because I can. And if I couldn't, I wouldn't. And it's as simple as that. I'd be out of business. So it's just the way it works. So that's the best answer I can give you on the price range, guys. I wish I can give you a solid number. I just can't. Wouldn't make sense. Great questions, guys. I don't know if we're over time or what. I'd like to answer these questions. So these are good. So, um,
I think we have time for just one more question.
all right, all right. I think Todd, here's more of a comment. Oh, actually, that's a good question, Mark. So let's answer that one. So, does 132 become a mandate by the board to require the executive to have security? That's actually a really good point. So, um, no, it doesn't automatically become a mandate or anything, but this is actually very useful to most, corporate structures to basically put some leverage on their executive to comply with EP. Let me explain. And I think I can answer your question with this, Mark. So, a lot of executives might not want EP. They just don't feel the need for it. They feel like it's too much for them. It's not a good fit for them. They've never had it. They don't need it. And so now you can say, well, you're going to have EP, and the IRS looks at it as you're either going to do what this consultant said, or you're going to pay your own tax liabilities. And so most executives are kind of like, okay, I'll do it then, So in my experience, some of them don't care. Some of them are like, whatever, I'm just going to do my thing and I'll pay my own taxes. And that's their prerogative. But this does give a little bit more, let's say, more of a weighted effort to get that executive to comply with protective measures, if that makes sense, Mark. So I think that's kind of where you were going with that question, and that does help. All right. All right, good stuff, guys. The a couple of resources here. So if you have a phone, you can scan these. I try to separate them so you can scan them separately. The top one is the IRS 132 actual, write-up of what it is. So you can feel free to take a look at that and read it. I suggest you do actually read it for yourselves. It's not very long. So actually, take a look at that and read it. And then there's the Fringe Benefit Guide, which the IRS publicizes, which we reference that often. Okay, so take a look at these resources, and the links are in there too. So you can obviously just navigate to those pages as well. Okay, all right. I'm
Perfect.
sorry I couldn't answer all the questions, guys, but if you will, thank you, Kevin, for putting them in the link there. And again, I'm sorry I couldn't get to all the questions, but guys, if you connect with me on LinkedIn, and get me any questions you need or whatever, I'll get you an answer. If I can answer it, great. If not, I'll get you an answer. All right, I'll do my best. So connect with me on LinkedIn, and we'll take it from there.
Thank you, Joe. Well, yeah, we may be able also to take some of these questions over to our a WhatsApp group on the executive protection community. By the way, all ASAS members are welcome there. Um, well, thank you all for joining us today in this webinar, the second EPC webinar for 2025 on Decoding IRS 132 Guidelines for Employer Provided Security. We explored the nuances of IRS 132, clarified common misconceptions, examined the real-world implications of compliance and non-compliance, both from a financial and operational standpoint. Thank you very much, Joseph. You really were invaluable in this. And as we all have seen, well, executive protection is evolving from a perceived perk to a strategic necessity. The data and the case studies that Joe shared today highlight the importance of a structured, compliant, and well-documented security program that aligns with regulatory expectations and organization priorities. Although I am personally based in Latin America, I find this information incredibly valuable, not only for understanding US regulatory frameworks, but also as a benchmark for best practices in executive protection worldwide. Sometime rather sooner than later, well, this type of regulations may come to our countries as well. Yeah. These insights, of course, help us elevate our standards and align with global expectations in safeguarding leadership. So let's continue to lead, to protect, to inspire together. I encourage you to stay engaged with the executive protection community, to participate in upcoming events, and of course, to share your experiences and perspectives in our social networks. By the way, just as a heads up, our next meeting as an executive protection community will be a at-large meeting at the EPC Hub during the GSX in New Orleans this year, Monday, September 29. And we are expecting to actually be able to broadcast right there, yeah, and we'll see how technology works this time, but we will try to share with all of our members worldwide at least that part of the EPC Hub meeting, yeah, or a portion of it. I thank you very much all for being here. Thank you again, Joe. It was a great webinar. Recording will be sent to all ASAS members through Connect. And yeah, let's keep in contact. Thank you very much. Have a nice day.
Yes, guys. Bye.